Here with Mid-Market Solutions. This is our latest episode of our internet video series, dated April the 5th, 2015. And as we get started here, we want to remind you that past performance is not indicative of future results. Trading advice is based on information taken from trades and services, other sources we believe are reliable, and we do not guarantee such information is accurate or complete. Trading advice reflects our judgment at a specific time, subject to change without notice. There's no guarantee that the advice we will give results in profitable trades. There is a risk of loss in trading futures and options, and that is substantial. And each investor and trader must consider whether this is a suitable investment for them. This is also copyright 2015. We are posting it here on our website, and we're going to look at a few markets that are set up and their seasonal tendencies. And here's how the charts that we're looking at work. We've got our markets here in different highlighted bars, and this blue dotted line is a seasonal pattern. And so you notice we are here early part of April, and we've projected the seasonal pattern out April, May, and through June. We're looking at the US dollar, and very possible we've topped out the dollar here in the month of March. And if you notice the seasonal pattern, light blue in here, is down for the entire month of April. So our trading plan is if we get small rallies or reversals, we're going to try and sell and short the dollar specifically through the month of April before we get a push higher in the month of May. So from a seasonal standpoint, US dollar, which has been very strong, starting to show signs of weakness and does show weakness during the month of May. Here's some markets that are going to be set up based off of seasonals and in opposition to the US dollar. We want to look at the Canadian dollar. Here's a market that had been in a pretty much a down move all fall until we got into February, March, April. Notice how the Canadian dollar has gone sideways, but the seasonal pattern starts here in April and moves sharply higher during the month of April before it flattens out into May and June. So we want to take buying opportunities as we see them in here. If we get a pullback in the Canadian dollar, this would be a good opportunity to try and get long and enjoy a rally. A market here that you may think would trade opposite of the dollar is the gold market, but look at the seasonal pace here of gold. We actually top from a seasonal standpoint here in January, trade a little bit lower in February, and then a sharp down move is seen during the month of March, and that continues all the way into the summer months as we trade sharply lower into the end of June. Now, we've had a big drop during January, February, and into March following the seasonal pattern. We should get a little bit of a bounce here into about the 13th of the month of April before we turn lower again. So if we get a little bit of a bounce in the next several days, we may want to look at that as an opportunity to get short for a move into the end of June. A couple other markets that we like here. Let's look at the E-mini S&P. You notice here we are very closely following the seasonal pattern. We had a drop in the month of March, exactly in time with where we should be, and then another rally. We had a pullback here, and we are chopping back and forth. The seasonals show a drop into about the 14th or so of April, so sometime in that time frame, and then a rally into the end of the month. This could be a nice opportunity to get long if you get a pullback into the middle of the month of April. Crude oil is another market to look at from a seasonal standpoint. You notice how the seasonals bottom here in late January, early February, and move higher. Well, the crude oil market starting to show a little bit of life. Seasonally, we move higher at least until the end of April. We haven't really started to move higher, so maybe this seasonal pattern actually extends a little bit longer, but we should find some more seasonal strength. Looking at soybean meal. Here's a market that we want to get long, and as we look at this strong seasonal pattern, right, starting at the beginning of April, end of March, very strong seasonal pattern that carries you all the way until June before the markets top out. This is also a very similar pattern to soybeans. You look at the seasonal pattern here, Actually, the end of January, we should have been moving higher, which we did. Then we had a sharp pullback, which is counter-seasonal in the month of March, and that I think gives us another opportunity to move higher here in soybeans. If you look at the seasonal pattern, should be stronger all the way into June. So there's some spreads that we've highlighted to our traders buying July, selling November beans. This may be a nice spread opportunity to take advantage of this seasonal pattern of beans moving higher into June. Okay, couple other markets here is wheat. If we're going to compare these two markets from a seasonal standpoint, let's look at Minneapolis wheat. This is the chart we have up here first. Notice how big drop in the wheat prices should have occurred right around the 31st, and then spring wheat starts to rally. Minneapolis wheat rallies up until about the 20th of May on a seasonal standpoint before pulling back. Whereas if you look at Chicago, you don't have that seasonal burst higher. You just have some sideways actions during April, May as harvest comes on in here. So if you want to get long, I would recommend the Minneapolis contract or possibly Kansas City, as this has a sharp move higher into early April and then a sideways pattern. All right, that's going to wrap it up here for our commentary. Remember that if you have any questions, please give us a call. We want to thank you for your attention in today's commentaries. And my direct number, if you have any questions, is 417-501-5132. Till next time, have a great, good luck on your trades, and let us know if we can help you out. This has been Brian.